Hey guys, it's Kenny from my chart and we are going to be looking at entries today. But before we get into the video, I would first of all want you guys to know that we have four types of traders. I don't recall talking about this with you guys. I might have, and I don't know if Norway did, but just in case we didn't, um, I'd like to let you guys know that we have four types of traders. We have scalpers, intraday traders, swing traders, trend traders, right? So depending on what type of trader you are, then you'll know what type of entry you're supposed to be taking, right? So scalpers are traders that get into the markets, then get out real fast, right? So they can be in the markets from seconds to like 10, 15 minutes. They're not in for a long time, right? So then we have intraday traders. Intraday traders can hold their trades for the whole day if they wanted to, just as long as it doesn't pass the 24-hour mark, right? So you can hold it for 20 minutes depending on the volume that was in the market, or it can take the whole day, also depending on your targets, right? Then you have swing traders. Swing traders can hold their trades for over 24 hours to about a week, right? Those are swing traders. Then you have trend traders who hold their trades from weeks to months, even a year, right? So trend traders are rare, and it's mostly for institutions, banks, right? So people do not really trade like that. So I know from you guys will have trend traders. No, I mean swing traders, intraday traders, and scalpers, right? So let's get into the charts. Number one, you guys should know about entries is time frame correlation, right? So what I mean by time frame correlation is you guys should be moving from the higher time frames to the lower time frames looking for entries, right? Also depending on your trading plan or your trading style, right? So you guys might remember this trade Noe showed you from the last video, right? So I'll first of all take an example from this one. So as you guys can see, let's go on the daily. So we'll go from the daily going down to the smaller time frames to look for entries, right? Ignore the red line, I put it up, or let me just remove it, right? So at the time, price just started dropping, right? Then it started going up, right? It started playing around. So here we first see a bullish candle, then we see what looks like a hammer, then we see a bearish engulfing candle with a huge wick on the top, right? So this indicated resistance being formed on the daily, right? So this was the area. So now what we look for after the resistance being created will be a retest of this candle, right? And then go to the smaller time frames, then look for the entry, right? Though price played around here for 2 more days, as you guys can see, but depending on the stop loss you would have placed on this trade, you would have probably not even gotten taken out, right? So we are from the daily now. Resistance has been created, right? Which is a point of interest, right? A zone of interest. Like I think now I taught you this too. So let's go to the 4-hour. So this is our zone of interest, since it's the rejection area, right? So as we can see, price has been moving into here, right? So now what we're looking for is a rejection. I actually needed the red line. I don't know, I removed it, but let me put it back, right? So I'm putting it here to indicate when the resistance was created. Back to the 4-hour. So this was the end of the resistance being created. I think the resistance closed by this candle, this one. Since it's a day, it has multiple 4-hour candles. That's why you might see that I placed it on that candle, but it doesn't end up on the specific candle when the day ended, right? So 23 heures, no. Yeah, this was actually the closing candle, right? yeah, this is where it closed, around here, around this area, right? So after this, we are to start looking for candle for rejection candles, and our second zone of interest is where support has been formed, right? So if we were to take a trade, this would have been our main target, right? But this would have been for long time traders, right? So like a scalper wouldn't have caught this, but depending on if you're an intraday trader, if you are willing to wait for it, but a swing trader would have for sure caught it, right? Because this is a range of 300 pips. So all we need now is for candle for rejections from the zone, right? So now what we need is we need a market structure forming, then we need candlestick confirmation, which will give us an entry, right? So as you guys can see here, price came up, touched the zone, came back down, creating what we call a neckline, right? But it's not as clean as it always is, and went back up, creating a double top. You guys remember from market structure, right? Creating a double top. Then it gave us, after this structure, it also gave us a pin bar. This would have been a good entry for like a swing trader, since your stop loss would have been huge, right? It would have been 84 pips, which is big. Then your take profit would have been here, right? Good risk to reward. We'll go through this in the next video too. But yeah, this would have been a good entry for maybe a swing trader, or even sometimes an intraday trader. But intraday traders do not really take trades with big stop losses like that. So most probably a swing trader, right? Now let's go to the hourly, right? Le 23. Right? So right now we are just looking for the type of entries we would have taken depending on what type of trader you are. So that first one, the one I just showed you on the 4 hour, a swing trader would have taken that, right? But an intraday trader wouldn't have taken it because it had a big stop loss, right? Because normally an 80 pip is a type of movement that an intraday trader would catch, right? Would go for. So he's not going to take all those pips and risk them in only one trade, right? So again, we're on the hourly. What do we look for? We first of all look for market structure. So market rejected again. Remember on the daily, market went up, came back down. Now what we're looking for is some type of market structure, right? Then came back, touched to our zone of interest again. So now what do we need? We need candlestick confirmation. After this weak bullish candle, what do we get? A bearish candle indicating bearish presence, right? So you would have taken your entry from here, stop loss a bit above the wick, then your take profit would have been here, 300 pips, right? This trade, depending on the type of intraday trader you are too, because some intraday traders tend to risk more than others, you might have taken this, right? But others, maybe not, but for sure a swing trader would have taken this. And by the way, this had you taken this trade would have taken about about 6 days. Definitely a swing trader, right? Definitely a swing trader. So now let's get on the, though let me show you something. Though if you're an intraday trader and you were interested in this trade, you would have taken it and placed your take profit to the last support, which is this, right? So if you guys remember, this support here is a 4 hour and a daily support, but we do not see on these bigger time frames, we do not see this support, right? So this is an intraday support. So this would have been a nice trade for an intraday trader to take, right? Now let's go on the lower time frames. If you, in case you're looking for a tighter stop loss, or you want to risk less. By the way, this would have been valid like this because number one, there is there is nothing, like there is no type of resistance that's in the middle of these candles, which indicates what? That markets will most probably drop from the resistance to the support without any problem, right? Now let's get to the smaller time frames, 30 minutes, right? Remember, we're still looking for an entry on the same setup, right? Now, depending on the type of trader you are, right? So again, daily, 4 hour, hourly, right? You remember what happens before this red line, right? Big zone of interest has been created. Price comes back up, right? With a big rejection, right? So now what we're looking for is market structure. We do not know yet that market structure is going to be based on this, right? Because nothing has happened yet, right? We need to be responsive, right? We are not creating any scenarios in our heads, because then we're only setting ourselves up for failure, right? So market goes up, comes back down, then goes up, then creates a double top, right? After the double top, then gives us a candlestick confirmation, right? You guys remember this? Right? So our entry is not supposed to be taken from here. It's supposed to be taken from here, right? Stop loss, 54 pips again. Then take profit would have been 113 pips. Pretty good trade, right? Though it kind of played around, it would have most probably freaked the most of you out. But yeah, you'll get used to it. So now let's go to the 15 minutes. On the 15 minutes too, as you can see, price came up, then came down, then came up, right, to the zone of interest. By the way, as you go to the lower time frames, because these weeks are candles in lower time frames, right? So now here, our our zone of interest is this, right? Which is why you can get smaller stop losses from smaller time frames, but the bigger time frames are more reliable, right? So you're basically risking more if you're taking trades from the bigger time frames, but the price is your trade is more assured, because the higher time frames hold more importance than the smaller time frames, right? So had you taken the trade from here, because price came down, came up, created a double top. How did it create a double top? By rejecting with a pin bar, then engulfing it, right, with a bearish candlestick. The stop loss would have only been 35 pips, and you guys have seen on the 30 minutes, it was 50 pips, right? So there is a big difference, right? And so on. Because now if you go to the 5 minutes, then the stop loss will most probably even be smaller, right? But let's look for another setup, right? So matter of fact, let me show you guys a trade I personally took today, right? So back to the 4 hours, right? So you guys remember the zone that was drawn on the 1 hour, right? Look at this. What does it do? It touches, because remember, we are number one, we look for market structure, right? So what does this mean? Price touched a level, went down, then came back up, touched that level, then rejected it again. What does that mean? It means that this is a double top, right? It's not perfect. You can see that this leg is longer than this one, but the markets aren't perfect, right? So you should learn how to adapt to them, right? So we are taking this trade. So what do we look for? If we take this trade, we're looking for the next support, right? So the hourly, right? So as soon as this hits, right? As soon as this candle hits, now we're interested. But because the candle looks like this, it looks like a strong bullish candle, we chill, right? We do nothing. We just stay on the bigger time frames, and then we start looking for some bearish momentum, because before this bearish candle, though it's a weak bearish candle, there was no bearish presence in the market. So who knows, markets would have most probably even broken this area, went up, retested, then started moving up, right? So after this candle, we see some type of bearish present, cancer, right? So now let's go to the hourly, right? After 3 p.m., then now we go to the hourly, right, to start looking for some type of potential entry. So as you guys can see, this was 3. But after this candle, so at 4, we had gotten another entry, right? But for more confirmation, you would have waited for another potential market structure to form, right? Because though this is an entry indicator, it also has a weak bearish candle, right? And it has a long wick to the downside. A rejection of 40 pips, that's actually big, right? Now let's go to now we're moving to the smaller time frames to see if we could have found a potential entry or just waited, right? At the time, we do not care and we're not looking at this, right? Do not look at this. We only care about this, right? So let's get to the 30 minutes because the double top has been formed, right? And we're at the point of interest. And what if price gets there and then starts dropping? But we'll get into that after, right? So as you guys can see, we're still seeing big rejection from the buyers in the markets, right? Let's get on the 15 minutes. On the 15 minutes, we kind of see the bearish momentum kicking in the markets, right? So if you wanted, you could have taken the entry from this bearish engulfing candle. But what time was this? It was 3. But the problem is this, right? The bigger time frames are telling us not to sell yet, right? So taking this entry right here, you would have justified it from the smaller time frames, right? But is it a nice idea? No. The thing is, you guys should wait for the bigger time frames to give you the rejections, then to look for your entries. So I would have not taken this entry, and I do not advise you guys to take this entry because though it worked out, it was an impulsive trade, right? Which does not really work most of the time, right? Because you do not know if price is going to reject after all. So let's go back to the 4 hour. So after 3, right? Now we start looking for another entry. So what will we look for? Number 1, we want this because as you guys can see, there is a point where candles are not closing under. So number 1, what do we want? We want a candle, at least one candle to form under this, right? But some type of traders too would want price to retest this weak bearish candle, right? Which it did on this candle, which was at no, this was yesterday, right? Yeah, my trade is down here. This was yesterday. So let's go back on the 60 minutes. So nice. Now when you go to the hourly, now you can clearly see there is okay, now we had strong bullish momentum, but when we got to the level, we got big rejection from the sellers, right? So you guys, had you wanted, you could have taken the sell here, right? Then put your stop loss here, then went for the next support level, right? This would have been a solid entry, but then still you would have been facing some type of support here. So what I would have done personally, depending on the type of day I've had, I would have waited for price to break under here, then retest it, then I would have maybe taken this entry. But this is being over responsive, right? Because this was another entry, right? So this would have been another potential entry, but this would have been a safer entry. You guys understand? So now, if we go to the smaller time frames, I'm pretty sure you will find way better entries that I would have taken with the much tighter stop loss, right? So for example, instead of the 60 pip stop loss, I would have gotten a 44, my take profit trade. I do not enter on the 30 minutes. I personally prefer the 15 minutes and the 5 minutes, right? 44 minutes or 44 pips. Go to the 5 minutes. Nice. A beautiful tweezer top. Tight stop loss, 15 pips. Go for 136 pips. This would have been a very interesting trade. So why would I have taken this trade instead of this trade, right? Well, it's because if you guys remember, on the 4-hour, we had multiple candles rejecting, right? We knew price might come down, but we were not sure because of the candle rejections, right? We had about two to three 4-hour candle rejections, and we had a level that price was not breaking under. So what I would have done, I would have waited for price to break under, then went to the lower time frames, then looked for a candlestick confirmation, then got into the trade, right? Now let me show you the trade that I took today. This is a trend line, right? So as you guys can see, do you guys remember what I told you about structure? When structure happens and you want to get into a trade, for example, this is a bearish market, what do we look for? If price has been playing around here and then it breaks, what do? We do not take this trade, right? We wait for the retest, then we sell, right? However the retest might look, retests never look the same. So you guys remember this support trade, this was support now turned into resistance, right? It's a zone of interest, right? So I personally saw this trade on the hourly, right? Saw this break, waited for price to retest, then I told myself I'll take an entry, go to the 30 minutes. So this is where I took my trade from. So as you guys can see, candle broke support. This is the candle that broke support, retest of the candle, right, and rejection of the area. This is where I took my trade. My trade looked like this and went for 82 pips, right? No, this. Yeah, precisely this. So if we go to the lower time frames, maybe 15 minutes, yeah, if you go to the lower time frames, you guys can see again price broke it with 2 candles, came back up, bearish engulfing. This would have been another entry. Let's go on the 5 minutes. Price broke under. You could have taken this entry, right? But depending with your stop loss, you might have gotten taken out. Which again, I remind you guys, when you take an entry on smaller time frames, then it's good because you have a smaller stop loss, you're risking less, but then you're also setting yourself up for failure because price might take you out, then move your way, right? So for example, had I taken my trade on the first minute, I would have a small stop loss and I would have chilled, right? Been like I'm almost risking nothing, but it would have taken me out, then went my way, and this would have frustrated me, right? Which is why it's always best to take an entry on higher time frames, right? Well, because of the time maybe I've been trading, I would have done this, drawn a zone over, and placed my stop loss over the zone, right? But let's say you are not familiar with this and you only know that you're supposed to be placing your stop loss over the last week, right? Then you would have been taken out and it would have most probably frustrated you. Nevertheless, it most probably would have even came touched my stop loss, then wicked on the 15 minutes, right? So I would encourage you guys to be looking for entries on the higher time frames, right? Whatever you're risking, if you feel like you're risking too much, then just lower your lot size and then take the entry, right? And now let me show you guys how to look for your targets, right? So guys, if you when you're looking for targets, right, we have structure. So we have this. As you guys can see, market was doing what here? It was turning into a bullish market, right? Lower high, lower high, lower high, lower high. Obviously, these are higher highs, higher highs, right? So when you see this, these are your point of interest rates. For example, taking my trade from here, which ones are my point of interest? My lower highs from the left and my higher highs, right? For example, this is a lower high, right? As you guys can see, the moment it got into the area of the lower high, market reacted to it. You see the rejection candle, right? Another lower high, market rejecting, right? This is a wick of the higher high, right? We can just do this, right? Rejection. So as you guys can see, when you guys are looking for your take profits, you should be looking into zones, right? Look for your zones. And another thing, right? When you're trading, right, and you see where market just flew, right, started consolidating, broke this neckline, maybe retested, this is a free fall, right? This will most probably be a free fall. Like you guys can see, right? Market rose from here to here with no problem, no struggle, which meant that no resistance was being created. That's why the markets dropped as they dropped today, right? But as you guys can see here, markets were consolidating, right? Thus creating some minor resistance and supports, right? Which made the markets not move as smoothly as they were supposed to, right? So I think you understand the entries. Today I only used one pair because I think it will be self-explanatory, right? So what I need you guys to do is, right, know about time frame correlations. Number one, know what type of trader you are. Time frame correlation, right? Know your zones of interest, then take your trade, right? In the next video, we'll be talking about risk management, both me and Noe, and then you'll know what targets you're supposed to be taking and what you're supposed to be risking, because now you can be losing maybe 5 times, you won 2 times, and you're still in profits, right? That sounds good, right? I'm sure it will interest you guys. See you in the next video.